Is this a raging bull market or a cock and bull story? Which bank and CSL could it be Australia's biggest company? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. I got the intro right then, by the way, Paul.
You did well done this week, Peter. Congratulations. We'll give you 5 out of 5. A big gold star.
Okay. Now, Paul, raging bull market. A survey came out from Bank of America from about 261 portfolio managers, and they say that the level of cash they're holding is really, really low, and the uptake into the market is quite extraordinary. It seems to me this should be a positive sign, but could it be a negative sign?
Well, it could be a negative sign, Peter, and I think that's a survey in the US, and I think we're seeing a much stronger bull market in the US than we are in Australia. Although this week it sort of traded a bit like that way because there wasn't that much news apart from a lower dollar, and suddenly our market had a big rally on Monday, despite banks getting sold off, BHP and Rio getting sold off, so they bought everything else. They bought CSL. We'll talk about CSL in a moment. About 3%. So, look, I guess as those cash holdings run down, that's actually as a long-term bear sign. But it does tell you that the fear of missing out is sort of taking over. And I guess we're starting to see a bit of FOMO happening now, particularly as we go into that December period. I think people are realising that if they haven't invested by the next month or so, it's
historically, you're saying December to about April is a good period for investing. The third year of a presidency is always good for the stock market. Even the fourth year is the second best year for US presidency and the stock market. So putting it all together, I think a lot of, and also the trade deal story, clearly Trump has been talking up the likelihood of a trade deal with the impeachment talk rising.
Well, he's becoming a little bit euphoric. Now, we often talk about the investment clock or the investment cycle, and we've always said there's never been a lot of euphoria in Australia. No. Maybe we just started to see a little bit of that.
I agree. Exactly what I wrote today. We're creeping into the euphoric stage after being in the optimistic stage.
I don't think we're well into it yet.
No.
But because the taxi drivers and people on the street aren't talking to us about stocks as much.
That's right.
Well, we get a few more questions we used to.
And the economy needs to rebound
stronger. And the economy needs to, but I think there's a little bit of that. So I think for those of you who are long, you hang on at the moment, right? I think if you haven't bought, I'm just getting a little nervous about piling in at these levels, Peter.
Yeah. Well, from my point of view, I'm going to be positive until probably March of next year. Then I might get a little bit more cautious. We'll wait and see. Paul, which bank?
Well, CBA surprised a bit on the positive side yesterday, Peter. It actually showed a bit of volume growth, both in mortgages, deposits, and also in business lending.
I wonder if mortgage brokers have been helping CBA, because Matt gave the mortgage brokers a real going over at the Royal Commission.
Give them a bit of a going over, and maybe that's because they got their processes a lot slicker, and that was a positive. A bit of an upside, but I don't think the market was quite expecting that. Now, I wrote an article in the Switzer Super Report on Monday about comparing the other 3 banks. I said there wasn't a lot of difference. Maybe, I came out marginally in front of Westpac because it's National Australia Bank actually gone to a premium. ANZ's got the issues about the Reserve Bank of New Zealand. We'll know on the 4th of December how much capital they might need, whether they'll have to do a capital raising. I also think ANZ got it very wrong, the mortgage process last year, and went right into their shell as lenders. And CBA seems to have come out. I mean, there was a mini credit squeeze last year.
Yeah, there was.
Didn't get a lot of coverage. The government doesn't talk about, the Reserve Bank doesn't talk about, but APRA went too hard on the banks, and they really went into their shell.
And that's why house prices fell.
And some banks went a lot harder than others. And people like ANZ admit it took something like 28 days on average to process an application. No wonder, their mortgage book went backwards.
And it was great for non-bank lenders.
For non-bank lenders. But CBA seems to come out at the best of that. So I think that was what the results said yesterday.
This is the hard
They are
question.
the premium bank. They deserve to trade at a premium, but
But this is all just words to people out there. The most important thing is, Paul, is CBA a buy here if you don't hold a bank stock?
Well, I think if I had to hold any 2 bank stocks, I'll hold CBA and Westpac. I think they're my picks. Always CBA.
Are you buying the bank for dividends at this stage?
I still think the dividends are attractive. We had this discussion, look at the investing program with Switzer this week with Charlie. Charlie compared the banks a bit to like Telstra's.
Like a utility now.
Utility. I still think that the yields are attractive enough, notwithstanding there's not going to be much earnings growth. They've got a big opportunity to cut their costs. I still think I'm not getting out of banks, right?
Yeah, I got to say, if CBA is $81 today, I wouldn't be surprised in a year's time. If growth happens, it goes up to 85, 86 bucks. All right, let's go to CSL, because CSL is challenging CBA as our biggest
CBA is currently the number one biggest company in Australia by market capitalisation. CSL is not that far off.
It will pass it, I reckon, Paul.
And the way it's heading, it's going to pass it. And we saw that on Monday. I mean, just a broker upgrade. All the brokers are pretty bullish on CSL. You can't not be bullish on CSL, like to some extent.
But
although expensive.
Why is it so good?
And it just jumped 3 or 4%. And that's because it's now so big, all the index funds, and all the fund managers have to buy it. So if CSL goes up, 2 or 3%, everyone's got to buy more CSL. So in some ways it's self-fulfilling. It cannot be ignored in a portfolio. The weighting at the moment is more than 6.5%. That means if you've got a portfolio of $100,000, if you don't have at least $6,500 in CSL, you're underweight CSL. If you've got $1 million, you don't have $65,000 in CSL, you're underweight CSL. And most people are.
Yeah.
Right?
And if you want growth, that is not a good idea because CSL is a good grower.
No, I'm a huge CSL fan, Peter.
You always
it
have
is
been.
super expensive, but you can just see it's got its own growth momentum because people are saying the banks are growthless. We don't like BHP and Rio too much because of iron ore prices. The supermarkets are overpriced. Telstra we don't like. That's the top 10 stocks, excluding Macquarie and CSL. And there's not a lot of growth there, and people are paying big prices for growth, and it has its own momentum because of where it is and how big it's become.
Yeah, I've never thought about this before, Paul, but you are a very bloodthirsty investor, aren't you?
That's a fantastic way. We didn't even rehearse that line, folks, but he's come up with it right.
What I was thinking about.
Yeah, one of your pearlers. I can relate that back to
Like
CBA
Pearl.
Yeah.
Okay, I'm Peter.
I'm Paul Rickard.
And we're
mad about money.